welcome everybody. Thank you for joining us. I appreciate it. I'm very interested to get on this topic today. I have an amazing guest, someone that we hired here individually at Mobilization Funding to just go through with our team just the fraud that's out in the marketplace, whether it's through email, IT services, in the construction space, not only just to help us, but we actually had a client that was impacted by fraud, and it gave us some indications to look into it for ourselves. And then we wanted to be able to share what we learned, which is a valuable experience. And so I want to welcome everybody, Suzanne Cox. She's with a company firm called Saltmarsh, Cleveland Gund. She is a shareholder in the audit and assurance services department. She's an active member of several associations, a regular contributor for trade publications, and she has a very, very strong background and experience and an emphasis in construction. So, Suzanne, welcome.
Thanks, Scott. Appreciate it. So, hey guys, this platform is a bit new to me. So if I screw something up, I apologize in advance. I am not the IT shareholder here. So we're going to chat a little bit today about common types of fraud, and then what can you do to either prevent it or mitigate it or just reduce your risk. And so, Scott mentioned our firm and what we do, and I am an audit, but I've spent about 25 years working with contractors and manufacturers specifically, not only just in audit, but also in what we call vulnerability studies and fraud assessments. How susceptible are you to fraud, and control engagements where we go into companies and we look at their controls and we, look for areas of weaknesses where, they may be able to add some controls and beef up, security. So I do have some experience, as it relates to fraud, and obviously in audit, that's one thing we look for and keep our eyes out for. So I'm going to give you some tips today on what successful companies do, and some stories from some unsuccessful companies, of course. And some of it may seem, I know our audience today is ranging in size of different, size contractors. So you may initially think, well, that's great, Suzanne, but it's not really going to fit my company. I'm a little bit smaller than that. And I recognize that. And some of this advice may not be perfect for your company, but it is what the best of the best companies are doing. And so if you're looking to grow, or you're just looking to strengthen your control area and mitigate risks, these are things that our companies are doing, successful, healthy companies, so that's where this is coming from. So again, just keep that in mind. I realize everyone is different, and this may not all fit for you, but what can you do at your size and your risk tolerance to, mitigate any risks you may have? So here are some common types of fraud. Not all of these are exclusive to the construction industry. Of course, you can see here fake vendors, fake payroll and employees, credit card fraud. Those are very common throughout all industries. Then we get into a little bit more specificity with construction, with bid rigging and change orders. And then we're going to briefly talk about some of the craziness going on in the IT world and cyber fraud as a general whole. So we're going to dive right in here. So fake vendors. So what does that mean? You're probably thinking, what does that mean? And I don't even understand. So for example, we had a client many years ago that was about 4 million in size, so not a large contractor. And they had a project manager that they trusted very highly. And that project manager was kind of in charge of a lot. He was out running the jobs, running the crews, paying the suppliers. He was in most cases choosing the suppliers and or the subs on the job. And he was a subcontractor, but for a larger GC. So it was like a sub of a sub. So he set up a vendor, and he said that this was a subcontractor that was working on the job, and he had the accounting clerk, set up that vendor or that subcontractor and was paying that subcontractor for work performed. And so when the owner was checking in with him, saying, hey, how's the job coming? What percentage of completion are you? Blah, blah, blah. The guy is telling him, hey, we're like 80% done. And the costs that are coded to the job and that they've paid out of the company are in line with 80%. You know, about 80% of the budget has been spent. And so one day the owner just happened to be driving by this job site. He was not a hands-off owner, but one that wasn't constantly on job sites checking things out. He drove by the job site and thought, that does not look like 80% complete to me. So, you know, gets out of the truck, tries to figure out what's going on, comes back to the office, talking to the accounting clerk, you know, who are we paying? How are we paying these people? I don't understand. This job is nowhere near 80% complete. So long story short, they found out, they called us. This was a tax-only client. And they called us and said, hey, we need help. We don't even know where to start, but we know something's wrong. Something's up. And so we found out that he had set up a fake company. And so when I say fake, you're thinking, well, I don't understand what that means. So the company probably existed. You know, he had to go to the bank. He had to get a checking account. You know, the company had a name, but it was not a legitimate company. And so he was paying this company, which was essentially him, for work performed that never got performed. So you're thinking, you know, how do I prevent that from happening? So one thing we recommend to all of our contractors, GC or sub, is to do qualification on if you're a sub, qualify your GC. If you're a GC, qualify your sub. If you're a sub subbing to more subs, qualify those subs. And so what does that mean? It, you know, means going out, seeing if they have a legitimate company set up. Do they have a website? Can you call a phone number? Do you get a person? You know, is it a legitimate company? So the second bullet here, double approval of new vendors or new suppliers. So what that means is, in this case, had the project manager come back and said, hey, accounting clerk, I need you to set up XYZ company. You know, we need to start paying them. If that clerk at that point did some research, you know, did it just a couple steps, she could have probably found out that, hey, this is not a live, real, legitimate company. So it doesn't need to be the owner, you know, necessarily always doing this approval process. It could be someone else in the company, because I'm sure you've heard of collusion before. So collusion is when two or more people get involved to do something. And when there's two people or more that would need to get involved, it significantly reduces the risk of fraud. So if you've got just one other person, you know, now the project manager would have to get the accounting clerk to collude with him to make this happen. So it could be just her doing just a couple quick checks on things. It could be an owner or an executive person just looking over vendors every month. You know, who are the new vendors? Who have we added? Who are, you know, just doing a quick oversight. And so we're going to talk a lot about oversight today. And in a small company, oversight can sometimes you know, be a struggle to make happen, because you might only have a couple people in the company if you're small. But that doesn't mean that you should ignore it. So it just means you might have to be a little more creative or think of some different solutions to that problem, but it does not mean ignore it. So here's another one when we get into the IT problems later, is confirming payment information via telephone. Do not send payment information via email. Don't send account numbers. Don't send security, you know, social security numbers. You know, that is just call whoever it is that you're supposed to be paying, whether it's electronic deposit and they need your routing number, things like that. Make those calls, not on email. So the final bullet point here is segregate duties between the person who enters the new vendors and the person who approves or pays the bills. And so let's go back to our example here. Say it wasn't the project manager, say it was the accounting clerk. Say the accounting clerk set up a fake vendor and now she is adding bills and she's approving them and she's paying them. If she has custody of all of those activities, that can be really bad. So you want to make sure that if you have an accounting person, that there is some oversight of that accounting function, whether it's she doesn't have the ability to pay vendors online or she doesn't have signing authority, you know, that's got to be approved by someone else. Those are important controls to have in place. So similar to fake vendors, you can also have fake employees or fake payroll. So as an example, back to our segregation of duties issue, if you had an accountant that set up Joe Smith And Joe Smith has a social security number that was potentially fake or stolen, who knows? And she or he sets up a new employee and then pays that employee. If that person has control of both setting up the employee and paying the employee, that's the problem. So that's another thing you just want to look again back to oversight. Make sure that someone is reviewing the payroll reports that's outside of the person that sets up new employees. So in a larger company, you might have an HR person that's setting up the employee, saying, hey, we got this new guy, Joe Smith, here's all his details. And he gets into the system, and then the accounting person pays that Joe Smith, person. So that would be a control if you had that many people. If you don't have a formal HR department, which is very common, you would need to get another person involved, whether it's an owner or an executive, someone to be reviewing payroll to make sure it looks applicable. One of our audit tests that we do when we perform audits is we will have the owner review everyone on payroll and, say, hey, do I know who Joe Smith is? Have I heard of Joe Smith? Make sure that all the employee names sound familiar to him. And again, we realize that sometimes you have some turnover in the field and we get that, but this is an important thing to keep an eye on, back to the oversight comment. So one thing, I have a story of an employee who sent an email to HR and said, hey, I want to change my direct deposit account. So he was getting paid on direct deposit, and it turns out that someone had spoofed his email and sent an email to HR saying, hey, I want you to change my direct deposit account. The HR people, they didn't know any different because they got an email that said, Joe Smith at xyzcompany.com. And so they thought, okay, well, yeah, Joe Smith just wants to change his direct deposit. So they went and changed it. And the next week, Joe Smith did not get paid. And Joe Smith calls up and he says, hey, I didn't get paid. And they said, well, we sent the money to your new account. You emailed us to your new account. And Joe Smith is like, I don't have a new account. I didn't change my information. And so what happens here, right? So Joe Smith didn't get paid. So the company has to pay Joe Smith now because he legitimately worked. And now the company is out two paychecks, one to who knows who, right? And then one to Joe Smith. And so where that company is now left is trying to figure out who got paid and tracking this down. And, many times that's a very cumbersome, time consuming headache, huge headache. And so companies will just, say, oh, forget it, whatever. It's only $500 or, whatever. But this happens, this happens a lot, and it can happen over and over again. So just ways to fix that is don't, again, back to the point on the slide before, don't take things via email. If an employee wants to change a direct deposit account, they need to talk to someone physically and make a change to that. Or you could have a change my direct deposit account form that the employee would have to fill out and sign and turn in. If you're using cloud-based computing systems, you could fill out a form online and submit it, that way as well. That can be secure depending on what type of software you're using. But if you're not to that point where you have that type of software, then, have the employee sign something and send it in. If you guys are remote, have them mail it in with their signature. So those are just some easy ways to fix that. And again, it sounds time consuming and maybe it does add a little bit of time or headache, and you get some pushback from employees, about these new controls. There's so many reasons that we're going to talk about today as to why you should do it, that you've just got to say, hey, this is what we're doing. As you grow, as your company gets bigger, it's easy to set these controls in place when you're small. But when you're big and then you don't have the controls in place, it's so hard to go backwards and then put them in place, especially again, back to like employees pushback. You've got more employees that are going to push back at that point. So it's easy when you've got a small number of people and you can get these controls in place and start, functioning like a larger company. It ended up that we had another company similar where they changed the direct deposit, and it got all the way through to payroll, and payroll actually called the guy because she noticed that he was wanting to get paid on a prepaid card. If you guys have heard about those. So she called him because she knew him, and she's like, hey, why do you want to get paid on a prepaid card? And they actually discovered it, but only because of that, only because she knew the guy, and she's like, why would you want to do this? So like I said, I got stories for days on some of these things. So credit cards. This one is probably the one I get the most pushback on, of all my clients. When you get in there and start lecturing them on, credit card usage and expense report usage, it gets heated. So I'll give you an example of one. The company had issued they just called it the tire card. And as you all know, large pieces of equipment require large tires, and they're very expensive tires sometimes. And so the accounting clerk had access to that tire card, and she could make purchases all day, every day long. And nobody ever looked at the tire credit card. They, just paid the bill and it got paid, and nobody ever looked at it. And so come to find out, she had been buying tires and selling them to other contractors. So this free money for her, right? Because she bought the tires on the one company and say they were a couple $1,000s. She goes out and she sells them for $500 on the black market, the tire black market. But she's pocketing $500. And you might think this isn't real. Like this, she probably didn't make that much money. She made about $100,000 over the course of a year. And so when we went back and audited the credit card for the tires, we found all the actual tires that the company used. And then we found about $100,000 of tires that the company did not use. And so that was another one where they called us in to help them, find how much she had taken. But so here's the downside, right? So they pressed charges, criminal charges on this woman, and that's all fine and well, except she spent the money. The money was gone. So they didn't get their $100,000 back. And they're just left with this, fraud expense on their books now, for $100,000 that she stole from the company. So a lot of these things, the retribution is slim for the company that got frauded, because the person has run off with the money and they can't, they certainly can't pay it back in jail, which is where she landed, So that's just one example. If you do have credit cards, make sure you're getting support for those things that are purchased on the credit card. Make sure that people are approving them, whether it's an owner or just another person, an executive or something, reviewing the credit card statements and saying, yes, these are legitimate expenses. We have receipts to back them up. This is a legitimate expense. So the expense reports and credit cards, some people give fuel cards to their employees, which is, I understand, super common. The guys are running around, you've got a fleet, everybody has a credit card, fuel card, and they can only use it for fuel. Okay, I get it. And I've even talked to owners that have said, well, I don't really mind if they fill up their own truck. Like, what's the big deal? It's $30 here and there. I understand that, except $30 here and there is going to add up, first of all, but more importantly, it is setting a tone that fraudulent or unethical or unscrupulous activity is acceptable. And so that causes a pervasive, just overarching issue in the company that this kind of behavior is okay. So when you have that kind of environment or culture, that starts to bleed into some other things. So when that guy might not be at home scheming of ways that he can fraud the company, but he already knows that the owner doesn't really care if he fills up his personal car with fuel with the company gas card. So he's already feeling like the tone at the top is not one that really cares, about these types of things. And that can bleed into some bigger issues and some more, again, pervasive issues. And so I cannot stress that enough, that if you want to, benefit your employees, or like I've heard the term, well, it's a perk. It's a perk, they can use the company card for some personal stuff. It's a perk. The way to give your company or your employees perks is to pay them more. Okay. You want to pay them more, give them a bonus, or give them health, 100% health care, get a 401k profit sharing plan in place. Don't perk them, quote unquote, by giving them the ability to fraud the company, because that is just the wrong precedence that you want to set. And so one of the other things I hear a lot is, well, it's impossible, Suzanne, to get the guys to turn in all the receipts. So you see my fourth bullet here, no tiki, no washi. I know you guys have heard that before. You don't turn in your expense report with receipts, you don't get paid. That's going to be a tough pill to swallow for some guys in the beginning. But once you say, hey, you're not getting paid, they're going to make sure they turn in their receipts. So it is, again, back to that size thing. If you've got 20 guys that are filling out expense reports, it's a lot easier to control than when you might have 40 or 50 guys with the same issue. So get those procedures and controls in place now. Make sure you're getting receipts for things that they're out spending. Another good example of abuse of that type of thing is, a lot of our guys with fleets, again, they'll go get a repair on a truck and they won't turn in the receipt, and the company will just expense, they'll pay the guy like, hey, yeah, he had to get his truck fixed. He was on the road. He had to get it fixed. Sure. We understand that, except, we've had so many examples where when we've called the garage to get a receipt from the garage, they have turned in a receipt for a truck that is not owned by the company. And so that again goes back to like, they'll call us to, do these vulnerability studies or these, kind of fraud reviews. And we find out that the car or truck that was fixed was not the company truck. And so this guy now charged, a $3,000 motor rebuild to the company for his personal Suzuki. Well, not a Suzuki anymore, but you get my point. So those things, like I said, they can just become, issues if you're not strict about getting receipts and things. So
I have a story for that. I spent probably 10 or 15 years, the majority in medical device sales arena, with a lot of, highly compensated individuals, both sales, marketing, operations, all different fields, with folks that are making plenty of money to support an entire family, if not others. And it was the $20, the $50, the $100 little things. And this one particular story, I remember that gas was being used at fuel card for literally the entire family, like 8 tanks of gas in a territory that if you filled the car up 8 times, you could have driven around the state of Florida like 10 times in a week. And then another one where flights and tickets were being purchased for entire family vacations. Anyway, the reason I tell you that story isn't because they weren't unscrupulous people. It was like normal people that sort of just got upset for one day and pushed the line by like expensing the first $10 parking ticket. No big deal. And as soon as you be safe, because if they don't have clear direction, the greatest people with the best intent, people are flawed. We all are. And you do something wrong and you don't even intend to. And next thing you know, it just runs away from them. And watching that occur is so sad, because when they go back, they know they were wrong and they just couldn't help themselves. And if you just can protect your family, your work family, by putting these guidelines in and look at it from that perspective, you'll be well served, in my opinion.
Yeah. Thanks for adding that. So, I mentioned earlier, we're in a lot of different companies, and within a couple hours, you can tell what the tone at the top is. When you walk into a company where that sort of behavior is acceptable, really quickly, especially when you come in to do audits and start checking up on things, you can get an immediate sense of whether that company has a culture of, ethical behavior and controls and, things like that. Or if it's a company with a culture of like, yeah, we don't really care, whatever. I mean, it's fine if the guys want to charge their personal fuel. But like Scott mentioned, there's just so many rippling effects from that type of behavior. And it doesn't, like you said, Scott, it doesn't start with people sitting at home going, what can I, fraud the company with today? It just happens. So thanks for adding to that.
And if you want them to do that, don't let them use their fuel card. Get a $40 Visa card and give them the $40 Visa card and let them use it for whatever they want.
That's what we always say. Like, we're like, hey, if you want that to be, back to my perk, comment, if you want there to be perks like that, give them a separate card and call it a perk card. You do run a danger of there having some employees with perk cards and some without, and, things like that. But that's a much cleaner, less, fraudulent way to take care of that. And so people know, like, hey, I get this $40, or like you said, $40 a month for free, whatever I want to spend it on. I can, buy drinks at the gas station or food or snacks or whatever, but, do the perks that way, not with letting them, be unethical.
Yeah.
So we're going to move into, if I could, here we go. If I could move my slide here, bid rigging. So this is very contractor specific, obviously. And I don't know if you guys have heard one of the more high profile bid rigging schemes in history was not that long ago. And it was related to the Buffalo Billion Project. I don't know if anybody's heard of that, but it was New York State, and they were trying to improve the northwestern part of the state. And so Cuomo was the governor, and one of his right-hand guys was, long story short, essentially paying contractors to bid on the work that was, they're huge projects. And so he was giving them inside information. He was saying like, hey, even though the proposal says this, we actually were going to do this. And so it was allowing those contractors to be the lowest bidder. And so they knew, inside information, which allowed them to be the lowest bidder and be awarded those projects. Now, if you're thinking that lowest bidder means they must have lowered their prices, no. They were inflating the margins and the profit on those jobs so much that they were able to give millions of dollars of profit off those jobs back to the campaign for Cuomo for governor. So that's how it was unveiled, is because now they have an entire laundry list of problems, wire fraud and just all kinds of stuff. They were awarded, along with the contracts, they were awarded a couple of years of jail time and some pretty hefty fines. So that one was one of the more, high profile cases, but that happens, a lot in smaller jobs, not just government jobs, although you'll see it's very prevalent in government jobs because it's just really common. So if a contractor is, supporting a candidate for office, they may rig some bids to let that contractor get those jobs. In response, they get, big contributions towards their campaign. But on a level that's more applicable, perhaps, if you are a general contractor and you are working with a couple subs that you really like, who knows, one of them's your brother, who knows, but you're like, hey man, I'm going to give you a little inside scoop on this job so we can give it to you. And that's the same concept, but on a lower level. So if you're a sub, now this gets to where it may affect you like really, personally, because you are maybe one of the subs competing against one of these other subs. And so there's a couple ways, again, that people do this bid rotation. So that's collusion of several subs. So they get together and they say, hey, let's all bid high. One of us will be the lowest, but we'll all bid high. And then the next job that comes around, the next guy will get it. And so we'll take turns. Or you might see that they all bid high, and then the guy that wins it uses the other ones as subcontractors on that job. So again, they're screwing the GC. So if you're the GC, you want to know about these types of schemes, or at least maybe how to identify these types of schemes so that you do not get screwed. Same thing if you're a sub that you sub, right? Because I have a lot of subs that sub. So in any situation where you're subbing work out, whether you're a GC or a sub, you want to pay attention to a couple things to make sure that there aren't, they aren't rigging your proposal. So another thing is bid suppression. So again, this is somewhat collusion amongst the subs. So the subs will get together and say, hey, I'm going to sit this one out because it's going to narrow the field, narrow the competition. And then the next one, somebody else will sit out. This is not uncommon. So you might be thinking, this is just crazy. But my husband's in flooring, and his dad was in the flooring business before he purchased it from his dad. So they've had the company in business since the mid 70s. And I got to sit and listen to they knew I was doing this webinar, stories just in the flooring industry for a good hour the other night. Back in the wild, they called it the Wild Wild West, back in the 70s and the 80s when there weren't a lot of regulation against it. So people didn't even get busted. So now you can actually get busted, and there's antitrust violations, and like those guys in the Cuomo case got thrown in jail and had fines. It used to not even be illegal. So this still happens. It's very prevalent in construction. So complimentary bidding is when you could either not, like the proposal that you give out, or the quote, the request for bid is not complete. It doesn't have conditions that can be met, but there's that one guy, the one guy that you want to win it, he knows what they are and he's going to meet them and he's going to make sure that those conditions are met. So that, again, there's a couple different scenarios under that, type of thing, but I just want you guys to know that these things are out there. And we're going to talk about how to identify them. Kickbacks is another thing that could be very prevalent in your specific company. So if you have a project manager that likes a certain supplier or likes a certain sub, and he's getting maybe money on the side to always award that guy the job or that supplier the work, you want to pay attention to that. And if he's driving a new GT3, just curious why, just look out for these things. That is very common. And you're probably thinking, well, yeah, we like to work with certain people though. And, sometimes we'll get to go on fishing trips and hunting trips and things like that, because we give, a lot of work to these people. There is a level of acceptability. I don't know if you guys know this, but IRS agents, if they come to your office to do work, they can't even take coffee from you. They're not allowed to drink your coffee. They can't take a donut. You can't take them to lunch. And the reason is because they don't want there to be any indication that you are bribing them. So that just shows you like the difference in industries. So there are some acceptable, yeah, sure. You definitely want to take your subs and your suppliers out on hunting trips and things like that. But you've got to make sure that line isn't, that the bids are still fair and that you're still fairly choosing these people and not because they take you on big hunting trips. So, and again, if you're the owner, that's kind of one thing, but if you're the PM and you're not in ownership, you're screwing the owner, because that sub that's giving this higher bid, it's costing the company money, and you personally, that PM is getting the kickback. So hopefully that makes sense. So how do you identify some of these things? So if you have, back to that project manager example, if you notice as the owner that the same supplier or the same sub is always getting the jobs, that might be something to look into. You might want to look at a report that shows you how often, subs are being used or suppliers are being used. And of course, again, you're thinking, well, yeah, I use certain suppliers because they always have the lowest prices. Just investigate it. Just look into it. So I'm not saying it's unethical or fraudulent. Just pay attention. That's all I'm asking. So back to that bid rigging slide, the company that wins it, are they subcontracting it to the losers? That could be something if you're a GC and you're trying to figure out if your subs are bid rigging your jobs. If the one sub that won is hiring all the subs that lost, that might be a problem. So you may want to make a few phone calls. You may want to look into that a little bit more. So the third one here, quality of work is not good, or the supplies are not good. It's just, again, something to look into, just something to pay attention to. Sometimes you just get crappy work, right? But sometimes it's because of, these other reasons. Now, this one was big when I was talking to my husband, the complaints from other bidders. So in the carpet industry, it's kind of a weird industry, but, there were a lot of jobs where the other people that bid, like all the bidders that lost would get together and make complaints because they're like, hey, this is rigged. The guy that won is not, like, this is not legit. And this was government work. So they were doing work for like schools and the air base back, in MacDill was fully functional. And so when the rest of the subs or the bidders are complaining because they think that something's up, then something's probably up, So if you're hearing, rumors or hearing things in the marketplace about reputations of other companies, just look into it, just see what the deal is, ask some questions. All right.
More in government projects versus private?
For sure. It's definitely more prevalent in government. However, back to the kickbacks one, we see that a lot.
Yeah. And I mean, the jail time and things like that, whenever you're using like federal, city, state, municipal taxpayer dollars, the crimes are more
Way
evident
bigger.
versus, if a developer who builds this hotels and they do 2 hotels a year and they like the same general contractor and they award it to them every time, therefore the same subs, that's not illegal.
Right. Exactly. And so the risk or the downside of this in general is, even if it's private and people are charging more for a job, that means the customer is ultimately paying more. So if the subs are charging the GC more, the GC is going to charge the customer more. And if the customer has to pay more, that means prices are going to go up, right? So to your hotel example, if you're the customer and these guys, the GC always likes to use these guys, this one sub, and that sub, can charge as much as he wants because that GC really likes him and he does good work. The GC is now charging that hotel more, and that hotel, it's going to end up in everybody's fees. It's inflation. So ultimately, environmentally speaking, from that perspective, that's the downside of it on the private side.
Suzanne, can I ask you a separate question real quick? It's a little different. In your experience, a typical subcontractor, and maybe it's different in the different trades, I'll let you segregate if it's important. What are the typical margins that you see, a gross margin you see a subcontractor should bid on a project?
What type of industry? Varies greatly.
That's why I was asking. So I would leave it to you to give a range. I would say you got your major trades. I'm thinking like,
Sure.
Structural, flooring.
15 to 30.
15 to 30.
It's a broad range, but my GCs are running a little bit lower, like around 5. But subs should be making, 15 at a minimum, or you're doing something wrong.
Right. And if you bid it at 15 and there's 10% retainage versus where do you see the subs that your clients you work with, like how tight it is or painful it is from them from a cash flow perspective?
Yeah, from a cash flow perspective, it's tough because GCs expect subs to cash flow the job, right? So they're holding all your money and you've got a couple jobs going. So cash is always tight. I don't have one contractor where cash is not an issue. We spend a lot of time with our subs helping them do cash flow analysis and how to make it all happen, because when it comes to that, you've got to look at your GCs and who you're doing work for and qualify them as well. We talked about qualifying your vendors, but also qualify your customers. So if you're working with a GC and they're expecting you to cash flow their projects, that's not a good thing either. And contract negotiation, we're going to get into that a little bit as well, can sometimes help with cash flow.
If the subs that you see growing, having a good business, living a less stressful life, where are their typical gross margins in that range between 15 and 30?
Probably more on the 25 to 30%. So those subs are usually sitting pretty well. Now, keep in mind, margins, depending on how you're doing your books, can vary. So some of you might be thinking, well, my margin's 50%. You're probably not allocating overhead, which is important from an accounting perspective or a financial perspective. So if you're not allocating overhead, that means your G&A, your expenses, like your general and administrative expenses, are too high, and they really should be allocated to jobs. So when I'm using these margins, I'm using in a proper accounting world where G&A is allocated to your jobs. So on some of my site contractors, their margins can be upwards of say 40% because they don't have a lot of overhead, right? They're just site guys. But my more specialty contractors are down in the 20 to 25.
Yeah. And if you have a 15 to 20% margin and you're not allocating overhead to that, what's going to happen in your opinion? What do you see happen first with those businesses?
Sure. So if you're not allocating overhead, if you're bonded, you're going to have to, allocate. But if you're not, you're overinflating your margin. which makes most people think that they're making more money than they are, which will ultimately affect how you're budgeting, how you're planning, how you're doing cash projections, how you're doing cash flow analysis, because you think you have more money than you actually do. And then when you pay everything on the overhead side, then you're left with less. So I would say that the contractors that are allocating overhead correctly to get the right job margin are just doing better overall because they have a better financial picture of where they're at.
I think that's important for everyone to hear and listen to. If you're not allocating overhead, those are real costs that come out. And if you're living and breathing more out of your checking account than you are really financial reporting, you're going to find that pain point much more severely than anyone else, because you're going to think you have a lot of cash and all of a sudden it's just gone in your account. If you're one that is thinking to yourself, oh, I have multiple hundreds of thousands or even $1 million a month coming into my account, and yet somehow all of it's gone at the end of the month, and you really can't see that's where those problems are going to occur, because you're just not allocating the right amount of your real business cost to each job, or you're just marking up, for example, your labor, or marking up your materials, and then you have to hope that that's enough to pay for your overhead instead of really allocating it. So you're just
exactly. So it's best to do an analysis, like a 5-year spread, or if you haven't been in business that long, however long you've been in business, a 5-year spread of what is my overhead rate. We do that for a lot of clients because they don't actually know what their overhead rate is. They're like, oh, it's like 8%. And then we do the math and it's like 14. Well, that's a big swing. It's a big swing in margin. So if your estimator is out there bidding a job and he's got his hard costs and he's really comfortable with his hard costs, and you add 8% for overhead and it turns out to be 14, that job might have just gone from 15% to, 9%. So that goes back to like having good financial information and knowing where you're at so you can estimate properly.
Gotcha. Okay.
Well, I know I think we're running a little bit short on time. So I'm going to skip over to change order. We've talked a little bit on the previous slide on how to prevent bid rigging, and I think you guys are going to get a copy of the slides. So we're going to go straight over to change order fraud here. It's really similar to bid rigging. As far as the contract might say, here's the base contract, and then give very favorable terms for change orders. And so just those are the kind of things you want to be careful of. Again, when you are giving approval authority to a person outside of the owner, to a project manager, he may be able to, swing the change orders for these huge profit margins and might be getting kickbacks. So in this case, you don't always need an unscrupulous contractor either. It could just be a naive customer or a sub in contract negotiation. You've got to have somebody look at your contracts and see if they are more favorable towards you or the other person, or if they're pretty equitable. I have a lot of clients that think their hands are tied because the GC's big and they run everything and we just have to do what they say. But that's, not necessarily true. You need to have somebody looking at your contracts and making sure that your contract terms are favorable for you as well as for your, customer, whether it's your GC or something like that. And then finally, we're going to move over to IT. So as you can see, this top sentence here, I don't know what that means. I doubt you do either, right? And that's what everyone feels like sometimes when people talk about IT. Is this Greek? I have no idea what they're saying. So the ultimate overarching example here is that if you aren't paying attention to IT security and you're not paying attention to this, get a good IT company. As an aside, our firm does do IT services. So if you need any help with this, feel free to let us know. But if not us, any IT company, to make sure that you have the proper controls in place. This is really, really big right now, especially with the remote world. Everybody's moving to remote, everybody's moving to email and cloud computing and things like that. So you want to make sure you're protected. Just a couple notes on here, make sure that the from email address and the to email address, if you're responding to things, just look at them, pay attention to them, look at them closely, make sure they're not different. A spoof is when someone can use your email to send someone else an email with your address. It's very easy. I could send you an email right now from your own email address. And if I wanted, I could change the return email to go somewhere else. So again, back to our examples of employee or vendor, fraud. If someone sends you an email that wants to change their direct deposit account, and you have that, they've spoofed your email and they've sent the return back to a different email address. Now they're corresponding with you, and that makes you comfortable because you're like, well, I've had this back and forth conversation, but really the whole time you've been having it with this fake spoofed email. So these are things to be, just aware of. And Scott, I know we're running out of time, so I'm going to just click this. This is just a couple things to check with your IT department or IT person, whether it's outside or if you're savvy, check some of these things yourself and make sure that you are not vulnerable. These are just some obvious ones to prevent like the email spoofing and the email hacking.
Yeah. On emails and things like that, I think we've seen it a lot. People are trying to access money in some way. And to get to the thing that you talked about in the very beginning is if you just have dual controls on certain items, or just at least a 2 or 3 step process, at least 2 separate steps, even if you get spoofed and even if someone falls for it, that second step can almost mitigate a high percentage of what ultimately would turn into a loss for you as a business owner. So
exactly.
Back to the very beginning of this presentation, those second steps really are the key thing to help avoid.
Yep. Double check, question things, ask questions. Don't trust email. Check the tos and the froms. Check, for example, our email is at saltmarshcpa.com. If somebody were to send something to someone that just said at saltmarsh.com, most people wouldn't notice that difference, that missing couple letters. And they may respond to me thinking, yeah, I'm talking to Suzanne, but they're talking to Suzanne at saltmarsh.com, not saltmarshcpa.com. So just know those things are aware and start checking them. And dual control, like you said, Scott, and we talked about earlier, is really important when it comes to financial information. If you're just having a conversation, that's one thing. But if you're trading account names and financial information, you don't want to be doing it with a fake person. So I know we're short on time. So that was pretty much my last slide, except questions. I just checked Q&A. I didn't notice any on there. Do you have any, Scott, that you've gotten from your side or?
No, I would just add, the only thing I didn't see any questions, but the one thing I would add is just, these things happen to everybody. They've happened to us. Just if it happens, don't beat yourself up over it. If it's happened before, there's nothing wrong with you. You're not necessarily doing things wrong. You just, we're all excited. We all own businesses. We all want to have success, and it's exciting when somebody shows interest in something. And so just be a little bit more cautious, but most importantly, set up these systems in advance so that when you are excited and you are there, your systems can catch the things that you might not.
Absolutely, because I always, like to say, I don't know how to lay concrete, so I don't expect to go out and lay concrete well. I'm going to hire somebody to lay concrete for me. So IT guys and accountants do this stuff really well. So if you're not sure how to do this or where to start, hire somebody that knows what they're doing, and get them involved to help you because you've got better things to do. You need to be out there laying concrete or whatever it is that you do. So we always give our clients advice that way as well, as stick to what you're really good at. And then trust someone, to do this other stuff for you so that you don't have to keep your pulse on everything. If you're smaller, maybe that's not an option yet. But as you continue to grow, you want to make sure these controls are in place, and doing the right thing when you're smaller is so much better than trying to fix it later.
Yeah. There was one question, Suzanne, if there's a company that is a victim of fraud, is that a deductible expense, that loss?
So if you have insurance that covers fraud, which not many people do, like the example I gave earlier where the project manager pretty much ran this whole job through this fake company, they did not have insurance that covered that. So yes, it is deductible from, a tax standpoint, right? If you do have insurance that covers it, it would just wash it. Not a good reason to commit fraud though. Anything else?
I don't see any other questions, but we certainly will have our contact information available, and any questions that pop up later on, please send them in. We'll get them answered for you and reply back to anyone that has any, and we'll share this replay back as well, so you have the information and you can use it as a resource.
Absolutely. Well, Scott, anything else? It was great joining you today. I appreciate you having me on. Hopefully you guys learned something interesting about fraud. And like Scott said, you're welcome to reach out with questions and we'll answer them as quickly as we can.
I want to thank you very much. Just appreciate it. This is great information. I learned something today, and we're going to incorporate these things too. And again, remember, this idea came from us actually having some issues with fraud attempts and phishing and hacking ourselves, and we thought it would be important to share with everybody else. So thank you, Suzanne, for your help with us specifically, and also willing to share with everybody else. Thank you.
Absolutely. Y'all have a good one.
You too. Take care, everybody. See you later.